Hello and welcome to Crypto Bible. My name's Oliver Tompkins, and in today's episode, we're learning more about how to look at a chart. But more specifically, we're going to look at the RSI tool and what it means, why you would use it. And of course, I've got my buddy on, Elliott from Planet Crypto Global, who's going to talk us through the chart and how to use the RSI and what it means. So let's get him in and start learning. Here he is, Elliott. Hello, it's always good to see you.
Ollie, how you doing, my man?
I'm really good. So we're going to be learning all about the RSI. What does it mean, RSI?
It's the relative strength index, and it's momentum indicator. It gives you an idea of what the directional movement or at least the last period of time momentum is of candles in that respect. So we spoke about candles last week.
Yeah.
That should be something that everyone's getting a little bit more up to date with. And my language as I talk, it should be ticking more boxes. So if you haven't already watched the video last week, some of the things I'm saying this week will make sense, right?
Perfect. Yeah, it's awesome. So we can get a graph up, right? I think you've got one ready for me. I can add to the stream. Here it is. So last week, this is trading value software, isn't it, Elliott? Just to recap for people.
So this is Trading View software. Is this what we've got in front
Trading
of us?
View.
So what I'm going to do just for everyone, so we can imagine. So we've got these two charts in front of us. We've got the Bitcoin chart, $40,000 as of today. I'm going to put this in here though. So we're going to break down what it is before we actually use it on a chart as such. So what we've got is the RSI. Now, for anyone who doesn't understand how we can get the RSI, you literally click on indicators. I've got it in my favorites just here, but if you want it, you're going to literally type in relative strength index, right? And you can see that it's been updated recently, and you might get something that has two lines on. In its purest form, the RSI, you're only going to see this purple line. So I'm going to get rid of this line here because we don't need to go onto that just yet.
Can we just move that, Elliott? Sorry, can we move the screen up just a bit so we can? Oh, perfect. There we go. Thanks.
Yes. So what this essentially is in its truest format, this is not what you're going to see straight away, right? Because you're going to when you add the RSI in, you're going to see two lines. Now we want to keep it as simple as possible. So I'm going to get rid of this now, and I'm going to put this into here. So all the RSI is it's a momentum indicator that gives an idea of a specific time period of candles. Okay. Now what that means, I'm going to get onto in a moment, but you can see up here we've got the RSI here, and you've got the 14. Now the 14 means it's the strength of the last 14 candles. Now, if I go into here and I click in inputs and I change it to 30, you're going to see that my numbers change, my line graph changes.
Yeah.
And we get the relative strength index of the last 30, in this case, 31 candles, because I think I put 31 in. But anyway, by default, the 14 is the default that we use. People get creative with it. 14 works absolutely fine, so I wouldn't worry too much about getting creative just yet and making your brain foggy and stuff.
Now,
so,
when you say 14 candles, Elliott, are those 14 candles on whatever time frame you've got? So if it's like daily, is that the last 14 days candles?
Exactly, yeah. So you can see I'm on the weekly time frame here. If I then go ahead and I go down to the 5-minute time frame, what's going to happen is this is going to become a lot more volatile. So I'll show you this. You can see that the RSI in this respect, just do this. The RSI has become a lot more volatile because it's a combination of the last 1, 2, 3, 4, 5, all the way to 14 candles, and it then provides an input and an output on here of essentially what the momentum is. Now, if I just go back, I'm going to break down how we actually read the RSI before I show you it on the chart. Now, primarily we've got three sections, right? So you've got overbought, and we don't have to worry about that just yet. So overbought. And I can explain what this is. Overbought is anything, let me just do this, anything above this 70 region here, right the way up to 100, okay? So this is what we would deem overbought territory, okay? Now, on the contrary, we've got what we call oversold territory, and I'm going to explain what these mean in a moment. Now, if I just do this and make it visible for people to understand, we've got oversold territory. If I just do this, and then if I can let me copy paste that, it's going to let me to do that. Copy, paste, allow. So overbought, and then what we've got is below 30. We've got oversold. Okay. Now this is how we actually break down the RSI. So you can imagine a lot of people. This is the easiest way for me when I've taught people in the past to explain this, because This purple part in the middle is what we call neutral zone, right? It's neutral territory. So when the line goes above into this green section, that essentially means the last 14 candles, the pressure and the momentum has been with the buyers, okay? So what that means is if essentially the line has gone above 70, it means potentially we might start to see the market come down because the momentum has been in the buyer's favor, and it might need to be, be regulated and come back down into the middle here, okay? And on the other side, and that would provide us somewhat of a sell signal, right? Because the market can only be bought for so long before it has to retrace, right? And on the contrary, if we see this oversold region, if the market goes, and I'm going to show you on the actual chart in a moment, kind of how this would look, so we can use it in real time. If this purple line here goes below the 30 region, so between 30 and 0, that would mean that the market has become into oversold territory, meaning that we're likely going to see a rebound to the upside because it's not going to go down forever, right? Now, practically on this chart, what we're going to see, there's actually one more that a lot of people miss. And this is where we understand the overall momentum of the market, right? And if I go back onto here, you'll see here, it's 50 region. If I get rid of this for the moment, we've got a little line, okay? Now, what this line means is it means the actual momentum of the overall market. So when this purple line here goes above this 50 region, that would indicate the trend has changed, okay? So if the market comes below, we're likely in a downwards trend, and we might go a downwards trend into an oversold region where the market's been sold too much and we're going to see a rebound. But then if the market gets back above this 50 region, that would indicate then the market momentum had changed into an upwards trend, okay? And the market was trending upwards until we go into overbought, which means we're likely going to see a trend change. Now, if I go onto the chart just here and I kind of put this in, if I make this bigger so we can see what's going on, and I put this in literal terms here, probably on the weekly, it's not a good way to see it because you can see on the weekly, we've actually never got below this oversold region because we've pretty much the whole time on this chart been, overall macro in a bull trend anyway because the highs and lows have been higher. But if I go into the daily time frame, what we're going to see on here is we're going to see, if I use the same methodology once again and I just bring these what I've got here over to here so we can make it a little bit more easy to see. What we can start to do is breaking down here is just do some back testing and work out what's happened previous. So if I take, for example, this point here. So if I do here, if I take, for example, this point, okay? So in simple terms, the market went into overbought region. So it got above this 70 point here. We topped out. The market then went down, right?
Yeah.
At the point the market dropped below this 50 region, the market went into a downwards trend and confirmed downwards trend, and it stayed in a downwards trend because it stayed below this 50 region.
Yeah.
And from there, once the market got below this 30 line and got into an oversold region, the market started to rebound. It then rebounded upwards. We actually propped back above this region, showed an intent to get into an upwards trend. We then came back down. We dropped a little bit lower. But the main thing for me is that we're continuously on the RSI been here. We were making some kind of higher highs as much as we've kind of broken to the downside, which does indicate we may start to see trend downwards a little bit in the near future. But that being said, recently what we've seen is from the point of this low here, which was oversold, which meant that the market had exhausted its sell pressure, we started to see the market continuously start to make higher lows and higher highs, right? And as of today, we're still making a higher low. You can see right now we're still in an upwards trend. That gives me clarity that as long as we hold here, we may actually see the market get back above this RSI and start to trend upwards continuously because we'll have held at a higher low, right? Now, again, this is replicated throughout all the different time frames, and you can use this momentum indicator to make trades. But there's got to be strategy with it when you're making trades, which you can get onto in the future. The best traders, what they do is that they use different indicators like the RSI, like the Fibonacci, which I'm sure we'll get onto it in weeks in the future.
Yeah.
Like supply and demand zone, like trend lines, and they converge them into a strategy that says 1, 2, 3 has to align, and then they don't take a trade until that aligns. Okay, and that is as simple as it gets. Now,
so when you say like 1, 2, 3, they'll use like 3 tools, and then when those 3 tools kind of like all say the kind of same thing, they go, right, this should happen, I'm going to make a trade.
Exactly that. Exactly that. Now, because you can't really just rely upon just the RSI giving you an oversold signal, right? You can see here, we've got an oversold signal. The market then rebounded from this point of oversold signal here. It rebounded 6%. So anyone trading that would have been happy days, right? It would have been okay. 5, not bad. But equally, what you can see just then, and this is where the risk comes in, and where you've got to have strategy with it, you can see that, yes, we got a little rebound up here and did 6%. For a nice day trade, that would have been okay, right? But straight after that, we then got a capitulation of the price. Bearing in mind, we got the next oversold signal here. We got a 2% bounce there, which would have been very, very hard to create a trade in that respect. But the market came down. So you can't rely just on the RSI. But what it does give you an idea of is when things are getting oversold, when things are sold too much. And then you can start to say, okay, well, we might get a rebound here. You can then start to, which we did do in that respect. You can start to use other things like trend lines. I'll give you an example, right? I can see 2 clear things here. We've just had an oversold signal on the RSI. We've just had one. We've also got a previous trend line that's been touched here, right? So for me, this point right now would be quite a good place to enter in a long position because you've got a level of support that's been respected in the past.
Yeah.
And you've also got an RSI oversold signal, okay? Which would indicate that potentially we may start to see the market rebound upwards, okay? And what might happen, you might see the market rebound upwards, and this is why it's good for a little trade. You might see the market rebound upwards, and it might fail to get back above here, which would show that the momentum's still in a downwards trend. And then we might project a little bit lower. You can see it happened here as well. Because the market was trending downwards.
Yeah.
So that happened. So if we can get back above this 50 region, it would give me clarity that we're going to continue an upwards trending movement, at least on the 4 hour anyway, right? So that's the main kind of breakdown as to the RSI, as to how you use it and how you dissect it. It's a momentum-based indicator. You can change the time period of which, the candle period. I use 14 all the time. If you want it to be a little bit less volatile, you can use a larger period that takes more data and provides an average from them. But I prefer the 14 period. So you got your overbought signals, your oversold signals, which would mean that you would be looking to sell, and it'd be a sell signal within the overbought period. I know people who've made a living just from buying and selling when the market's been oversold, holding on to it, not as a swing trade and then selling it when it's overbought, right? That's as simple as it comes. Now, for me, the market's too competitive to just have a strategy like that. So the best traders have used this data in confluence with other things that provide them better entry points into the market, which provides them a better risk and reward, right? Which is why the RSI provides good data, but not what you should be using just to trade, because it's lagging. It's not real time. It's using previous data to give you analysis, right? So that's your breakdown of the RSI, your oversold, overbought signals. There are other things that I can get into in the future, like divergences, confluence of and convergences in the future. But I don't want to overcomplicate it right now.
They sound like fancy words. They're fancy words, Elliott. Yeah.
As long as we can break down the 3 areas, overbought, oversold, and neutral, and then the regulator of the trend, this gives you enough to start backtesting stuff and saying, okay, the last time it popped below, we saw a move of 6%. The time after that, we dropped below there, and we saw a move of 13%. If I go on to the daily, there's going to be some screaming buys that we've seen over the time. There was a massive one here. You see the market from the point of this oversold signal here, we found a bottom. The market rose 31%. Okay, so it's pretty relatively simple on the higher time frame. Very, very similarly just here. We then got the market just here once again. Got the market below. We got a little move of 49%. Very, very similar in this respect. It just gives you an idea of the directional movement. In this respect here, we got a capitulation of like 45% in this entire move as a whole. Okay, which is crazy, and it just gives you an idea of what's coming. If you see the market running very, very hot, and then it goes into oversold signals, overbought signals, it could be time to start to scale out your position, start to sell some positions and take some profits,
Right. Okay. So just to summarize, so there's like 3 lines. If the middle one is what's the value of the middle line again? 40, did you say?
Yeah. So the middle line is 50.
50. So if it goes above that, it's showing a little bit of a bullish trend and going up. And then if it goes into overbought, you're likely to see a pattern of it coming back down. And if it goes below the 50, it's like a bearish trend. And then if it goes into overbought into the red out of that line, then you're likely to see it come back up, right? But obviously, that's only on history, previous data.
In short, you oversold, meaning the market could return to the upside, is below 30. Okay,
30. So if it drops below 30, and if it's in that kind of oversold region, history shows us that it can swing up, but then also, you know, no one can predict the future. It still can come back down. But as we see on this chart, we can see when it has hit the oversold, it has then kind of gone back up. But then also, so yeah, I see what you mean about you can use it, but also you kind of need other tools with it, not to rely on it solely.
And then your overbought signals are above the 70 region just here. So you got below 30 is oversold, overbought is above 70. Medium kind of trend, neutralizer, not necessarily neutralizer, but identifying where the trend is your 50 region, and anywhere within this purple section here is what we call neutral zones. You know, the market is, if it's above this 50 region, it's more in favor of the bulls, but not overbought. And if it's below the 50 region, it's more in favor of the bears, but not oversold. Yeah.
So what kind of person would use this, Elliott? Is this specifically like day traders because they're looking rather than people that are buying, you know, an asset to just hold long term over like 5-7 years plus? Is this like more day trader kind of vibe?
To be honest, it was very effective on investments, right? Because it gives you an idea when to buy and when a good risk and reward is. If you're buying on a weekly oversold pattern, not pattern, if it's oversold on the weekly, you know that over a period of time, that could yield a massive investment because it's undervalued if it's a good project, right? But equally, if you're buying on an oversold signal on the 5 minute, it's so volatile. So what I would say is it's a fantastic indicator to use for investors. When it comes to day traders, if you're a scalper, absolutely not, I would say. If you're a day trader or a swing trader,
Elliott, what's a scalper? Because I'm going like back in times when people like taking tops of people's heads off. What's a scalper?
Scalper is someone that would be looking to get in out of the market very fast. So 5 minute time frames, 10 minutes, buying and selling, making minute percentages day by day. A day trader is someone who's making a couple of days trades a day, and a swing trader is someone who's making a couple of trades a week or one a week or whatever, right? And then a positional holder is someone who's buying into the market, for 6 months, and then investors long term, right? So that's how
I got you. It's all like the terminology, which is interesting as well, and hearing what people say. So yeah, no, appreciate that as well. And that'll be definitely good for the viewers to understand that. So swing trader someone that makes a couple of trades a week, day trader daily, investor long term, right? 3 different types of pretty cool.
You got 5 really. Swing, couple of week, day, few a day, scalp, loads a day, positional holder between 1 and 6 months holds, investor over 6 months hold.
Okay. Very cool. I love that. I'm learning. That's so cool. So let's have a quick chat about the market at the moment. It's kind of, I thought because the Miami conference was on, we might see a bit of a pump or some big news, but nothing's really happened, and it seems to be like in a downward trend at the moment. Is that because of the Fed rates and stuff?
Yeah, I mean, to be honest, a lot of it is driven. I mean, you saw the FTSE came down as well, right? And obviously, like the normal traditional index funds and stuff, they come down.
Yeah.
So I'm not really that worried about crypto because we're holding quite nicely. Yeah, we saw a 5 and 6% down day for Bitcoin, but to be honest, we're still until the upwards trend structure is broken. I stand by my targets with Bitcoin that we can still hit 50K relatively soon. Anyway, we hit 48, which was quite shy of my 50K target, a couple of thousand. But as long as we hold where we are right now, we'll get up to 50K relatively fast.
That's cool. And then quickly, just before we finish, are you any coins to chat to us about? Has anything been cool popping with you?
Yeah, I mean, I'm quite keen. Just give me one moment. Let me get my tracker up. Yeah, so what I'm looking at this moment in time, again, I spoke quite briefly about, what are my previous kind of, targets for certain things, and what my coins are that I like. So I don't need to go over the same things, but equally, I'm looking over the same things and looking, well, actually, how are these being affected by the movement down? hlrLU It's down 27%. Is there opportunities to scale into that? Absolutely. That's going to be fantastic long term. You know, your Polkadot, that's below $20. That thing can get above $40 over the long term. Easy. Solana, yeah, it's above 100. It's not fair value. It's still undervalued.
Yeah.
So yeah, that's really where I'm seeing at this moment in time is your Polkadots. Your Avalanche is below $80 as well. So that's fantastic for potential investments. And yeah. I mean, even to an extent, Uniswap, man, that's at $9.40. And that thing's been above 20. So that's severely undervalued, you know.
I think this is a good time as well to chat about, because it's kind of proof that if you ever have FOMO, because crypto is so volatile, there are these points now where if you just say to yourself, hang on a minute, I'm not going to jump in just yet. I'm just going to watch the market a little bit more. And then you could say something like this, not financial advice at all, but something like this, one could say, well, this is actually a good entry point, rather than, you know, FOMOing in when you see all the green.
Absolutely. I mean, the best investors plot out, you know, what people do is they buy when the market's going up, which is okay if you've got a strategy, but equally you need to flip what you're doing. You need to be buying when the market's going down and selling when the market's going up. And often people do the opposite. They buy when the market's going up and then panic sell when it's going down. So, you know, that is a simple mindset paradigm shift for people who fail in investing. If you hear people talking about it that you've never heard talk about it, just run a mile. Don't even look to try and do it, and just wait until the hype dies down. While people are investing in it, delay gratification, learn about it more, and then when the time's right, you sniper ready to go. You know, and it's times like this right now that, you know, Bitcoin at 40K relative to where, you know, I think I mentioned my next target for BTC is 151,000.
Yeah.
It could be 9,000 before it goes there. You know, prime opportunities to start scaling into, you know, Bitcoin. If it goes below 35K, even better. When I say scaling in, I mean splitting up your entries so that, you know, you buy a little bit if it goes down as well. You're not throwing all your life savings.
Yeah, exactly. Not going in, because if like you say, kind of like dollar cost averaging, like tech, you can buy a bit. If it goes down, you go, well, I didn't put my whole money in, but now I can buy a little bit more because it's lower. And then if it then does go up, then you're like, oh, wicked, I bought a little bit there and a little bit there.
If you've got 10 grand to invest and the market's high, and you know it is because it's above the RSI 50 or whatever on the weekly time frame, let's just say, or the daily, you know, it might be worth throwing 2 grand into the market and then saying, right, okay, what I'm going to do is monthly, I'm going to stick another grand out of that 10 grand in, right?
Yeah.
And that way, if the market goes down, you're not stuck in massive positions and worrying. You know, you've got the same acquisition of 10K over a period of time.
Yeah.
And if the market goes up while you've got money in the market and you've not put your full 10 grand in, take your profits. You don't need to invest anymore and panic into things. You know, you've ultimately won. You've won the game. You know, you've made money. So that's what I'd say. It's very much a thing you need to learn. You know, I call it's EQ, right? Emotional intelligence. So understanding how to manage your emotions to get a desired outcome. You know, you speak to me earlier. I have pretty much no emotions towards this stuff, and that's because when you become familiar with what it is that's happening from a data level in front of you, you remove the emotions from the decisions you're making, which is the massive failure point for 99% of the people in this market.
I can imagine, yeah, because people can't detach themselves from, you know, their hard earned like money, and you know, we always say, you know, don't invest your life savings or anything like that. So like money you can afford to lose, and train yourself to be like, hey, look, this is money. Instead of doing a football bet or instead of doing this, I'm just going to try this. But like you say, it's emotional and it's hard to just kind of turn yourself off. But if you can, like you said, it's a great tool.
Literally, Ollie, like, I mean, everyone falls victim to it, right? Like, I've been in positions in crypto, right, where literally you start when you're making like a shit ton of money, you get to the point where you don't treat it like money. What you treat like, you just treat it like a number. And what you can fall victim to there is I have been in some ridiculously low points and ridiculously high points in my portfolio. And the main stages and the issues I've learned from is when that portfolio is up a ridiculous amount, like I'm talking like hundreds of thousands, you know, for me, I was like looking at it and I was just like, I'll just leave it. I don't care about it. But then when I look back, I think, well, hang on a minute, like there should have been some decision to at least realize some of that potentially as well, which I did. Yeah. But, you know, there's always learning points to be had. So it's on the contrary as well, not just panicking, but also once you are making money, you need to be emotionally intelligent about how you extract that and realize that as well, you know? Yeah,
definitely. Oh, no, definitely some great thoughts to think about there. But wow, what I just want to say, what an episode. So we've gone real in basics on the RSI and talked about what kind of tool it is. I think it's really cool. I think hopefully like next week we'll do another tool so we can look about maybe utilizing the RSI with something else, but find the fundamentals of that. And then a little bit of chat about the market, and then just some real talk. I love it, Elliott. We're so cool.
I agree.
Awesome, mate. Well, I'll let you crack on, and I'll see you next week for another awesome episode. Cheers, mate.
Peace.
See you in a bit. So there you go, guys. That's been this week's episode with me and Elliott talking about the RSI tool. It was very cool, very broken down really well, I think, you know, with the oversold, and top and bottom option. So if there's anything you want to go through, have a little look. You can rewind this video, check it out. And if you want to know anything else, if there is a tool that you really want to understand, please put it in the comments below. And what I'll do, I'll ask Elliott and see if we can do an episode on it. So we're open to suggestions. As always, we're nice guys here. We're nice people. As always, throw me a like, get subbed to Crypto Bible, and I will see you on the next one.